right, if you're living paycheck to paycheck, you know the very idea of saving for retirement sounds like a luxury. But, you know, whether in your 20s, 30s, 40s, or 50s, there are things you can do now, even if you're just getting by, to save for the future. And here with details is personal finance expert and author of A GPS for Your Retirement, Ken Mahoney of Mahoney Asset Management. Thanks for being with us this morning.
Great to be here, Craig.
All right, let's get right to it. You're in your 20s. You're living paycheck to paycheck. Hard to put anything away, you think, but you got to do it, right?
Yeah, you know, 20 years old, I mean, my gosh, what a great time to
It's a sweet spot.
It is a sweet spot. Before you have a lot of expenses, maybe living at home, what a great time to sock money away. And the compounding effect over time. You really got to put money away in the 20s. It gets harder down the road. So let me give you an example.
Okay.
Let's say you can put $5,000 in a year. I know it's difficult, but I just want to show the compounding effect.
Sure.
At 5% at age 65 is nearly $800,000.
Wow.
That's pretty insane. Now again, granted, a lot of 20-year-olds are social.
Sure.
Right, so they're social butterflies, or social, social media, everything. One night stay in, okay? Of the 7 nights, one night stay in, save yourself $50 a night. That's $200 a month. Over the course of years, $2,400. You know what that comes to? $380,000. So stay in one night a week, social butterflies.
A little sacrifice can pay off, right?
You know, when you're in your 20s, it's a good time to take some risks too.
Yeah.
If you think about in companies that started like Steve Jobs and Bill Gates, they did it in their 20s. So if you're gonna take a risk, you know, keep your day job, but create a company. Do something bold, because before you have kids, that's the time to take a risk.
All right, your 30s. What do you need to be doing in your 30s? That's kind of, you're starting to get there, right?
Right. You know what? You know, you built up a lot of expenses while you're in your 20s. Companies love reoccurring revenue.
Right.
As a consumer, you don't like reoccurring expenses.
Sure.
What you want to do is put those dollars away. You must be able to find $100 a month that are reoccurring every month. Okay. That's $1,200 a year.
Okay.
It's over $100,000 you can save by the age of 65 just by finding two items that are reoccurring every month.
All right, so you're in your 40s. Now's the time you might want to start thinking about worrying a bit.
Well, guess what? In your 40s is the most difficult time. Okay, you're not in your peak earnings years, but you're your peak expenditure years. You have a mortgage, you may have kids, but you know what you can do? Put money away into your 401k plan. If the company matches, match as much as you could put into there.
Okay, so you got to step it up a little bit.
Step it a little bit, yeah.
All right, let's talk about your 50s and your living paycheck to paycheck. This is almost a red alert time, isn't it?
Yeah, in your 50s, by the way, is a sweet spot. You know, it gets a little bit easier, and the reason why is you're probably at your peak income years. Your expenses should be waning a bit. Mortgage are paid off a bit. College expenses perhaps are paid off. Maybe inherited some money, and the IRS allows for a catch-up at age 50. You're allowed to put more money into your 401k plan, put more money into your IRA plan at age 50. So they're allowing you to put more money away because they realize maybe you didn't do it while you're in your 20s, 30s, and 40s, and now it's time to play catch-up in your 50s.
Yeah, a lot of people haven't. All right. We want to thank you for being with us. Ken Mahoney. Let's see, the book is GPS for Your Retirement, Mahoney Asset Management, and we're going to have more details on our website on these strategies. Get to saving now. Ladies.
You can save a couple of bucks and you can actually really save big. Thanks, Craig, for that information.